How's everyone doing? What's occurring? Just did a nice sweep of the highs there. Yesterday's high. Just going to bring up the chats. YouTube is spazzing out. What's happening with everyone? How's everyone doing? Pretty crazy day across the board, to be honest. Treasuries have been wild today. And it looks like the old classic sweep of the high and then back into the... This is a weird looking bell curve, isn't it? Let me know if you're taking any trades today. We have a little bit of data coming out at 9 o'clock, but nothing worth noting about. There's some Fed heads talking in a minute, but just the usual spiel. They're basically taking lessons off of Powell, say loads of words. Say loads of words, but never say anything. So let me know if you guys have taken any trades today. Or what all's been happening, never mind the trading. I mean, these Fed guys literally just say the same thing. Just sim trade, buddy. Good day to take sim trades, to be honest. What markets were you testing out? Up 5 points in ES. Nicely done, man. That's good. $20 tickaroos is good. Which market do you prefer trading? TP? Is it ES or NQ? Feels much better having NQ. We're just about to get one of the another Fed dude talking. Doesn't really matter anyway what the guy says, unless he comes out and says we're cutting next week. It's just the regurgitated shit they all discuss. Data, more numbers, we'll wait and see, no firm dates, don't know our ass from our elbow, that type of stuff. Nicely done. Yeah, NQ helps a lot to sort of gauge some trades in ES. But looks like we're heading right back into value today. All the trending has been happening in treasuries today. Yeah, nice. Nice trader boy. I'm gonna mute this. We'll mute that because it's annoying. But yeah, the correlations are extremely important in my opinion. Even more so if you want to add in tick strike and and pop on like to be honest with you, I'd advise if you click on the link in the description, I think you get like a week or 2 week free trial, maybe even a month. I can't remember how long you get. Um, and then when you're trading indices, if you add on like Apple, Nvidia, Google, Microsoft, Meta, Tesla, then it really helps your further correlation. And sometimes you can see initial spikes, or dumps. It's normally money is flowing into one of the big six. Can help add that. I think for breakouts it's really good. So you want to see all markets going in the same way, and some maybe some size coming in. So here they're just laying out that 100, probably testing the waters to see if sellers take it, because if they're hungry to hit into the bid, and they are, so they take it. Yeah, yeah, no problem. I mean, I did try and add on that price squawk or whatever, but the interface is shit. Wow, what a dump. The interface is just not it, in my opinion. So I don't need it to tell me lift and hit, for example. I just need to know when size is coming into other markets, and a flashing blue or for buying and a flashing red or whatever is sufficient. I normally set tick strike at quite high levels. Wow, this is really dumping. Jeez. Well, I say that when I say dumping, we're just going back into value, but this is the you get the this is the poster child trade. Jeez, oh my, what is going on here? Let me see. I've just turned this off. If I missed anything, it's one of these Fed heads dudes. Oh, I just want to hear this because I wasn't paying attention. Yeah, this is going nuts at the minute. I think they've just come out and amended the forecast there. Let me adjust that a wee second. I've actually got this on mute. Yeah, and it's 2 minutes ago. Wow. I mean, with this type of movement, if we take out this low, I just, they're definitely not going to try and. It's never just going to take out these lows and continue dumping, is it? There's always going to be trickery in here. This is just you know, a move back into the point of control, right? But this is definitely the poster child for the sweep of the high, isn't it? Sweep of the high, then like a dump of like 40 ticks or something. If only it happened like that every time, we'd all be in the Bahamas. Why is the market so volatile today? I mean, I suppose there's always volatility when these Fed dudes talk, right? It's just an excuse at the end of the day. I just wasn't expecting it. I know there was retail sales and some other numbers, but they don't really tend to have that much of a difference, though. I mean, when I say that, look at the market. It's not. I mean, this has been terrible price action. It's opened, went bid, pull back. I mean, I suppose it's relatively clean, but there's not been any real direction. This has been the first sort of clean move I've had all day. We certainly opened the stream at the right time. Ah, of course, of course. I forgot to make 2 days quota in one day. So, day off tomorrow. It's not like a bank holiday. What is it? It's like the Juneteenth or something. What actually? So, because I'm not from the US, I've not googled this. What is the purpose of this holiday? If you can let me know. What's it like celebrating? Is there like a? I could really easy. I could Google that, but I thought I would just ask you guys. Seems you peeps are probably from the US. Huh? Emancipation of blacks. Oh, really? Let me Google it, see what it says. I feel like the US has quite a few random holidays, to be honest with you. We don't get as many as that in the UK. And what's it called? June 19th holiday. Juneteenth, also known as Freedom Day, Jubilee Day. Oh, okay. Celebrates African American freedom in the United States. So, I mean, that's an excuse for a holiday, isn't it? So it's just basically celebrating black people in the US. I mean, good on everyone, I suppose. Right. Ah, I see. I see. Okay. Excuse my lack of culture for US holidays. Seems like a. Is it like loads of. Well, I'd imagine there's going to be big, like. I don't want to use the word rallies, but you know, events and cool stuff for people to do. Yeah, I was thinking that. Juneteenth. That's not a very good name. I mean, Freedom Day makes sense, but everyone, you know, people. I don't know. You're right. He could have picked a better name. Hi, Sebastian. Nice of you to stop by, buddy. Kyle, how's it going? So this is the thing, sadly. You know, this has been a really clean move down there, but you'd think with that amount of selling, it just never takes out the lows. That you know, it's almost like market making firms are. It's not allowed to dump that much. You know, we definitely start working the bid down here. That's for sure. But here we are, chopperoo. Nice. Well, I mean, that's good. It's good. Some more time with family and friends. Can't beat it. Doesn't really matter what the holiday's for, does it? It's always welcomed. How's everyone's trading day? Did anyone take any positions today? I think it's set to 3 or 4. Remember off the top of my head. So I'm only. This is really set for treasuries, to be honest. Um, but it just allows me to see what's really happening at the recent bid and ask. Because I feel that if you've got if you've got like 20 levels pulling and stacking, to be honest, they can pull it anyway by the time it gets there. So you just really want to see what's happening very close. But the trouble is with ES being really thin. I mean, this is thick, I suppose, for ES standards. 100, like 110 bid, 120 offered. I mean, the current prices when it's close are like 30 bid, 40 offered. But the just not the same as years ago. I mean, the ES is getting thinner and thinner, man. And the thinner a market gets, to be honest with you, the less interested I am to trade it. To be honest, because it becomes the thinner the market, the more algorithms and market making firms can just, to put it bluntly, fuck with you. To be honest, because they can just simply pull their bids. They can lift the offer. Um, So just as an example of what they can do, they're working. We discussed this in previous streams, right? But when the book is this thin, they will be working both prices. So they'll have bids here and they'll have offers here, right? They're basically capping the range because they know if price gets up here, then they can stop it. If price gets down here, they can stop it. So they effectively cap the range in like a 10 tick range, depending on the volatility of the day, right? So bearing in mind they're working the offer and the bid at the same time, so that they've got both sizes going. Now what they can do is they can start absorbing on the offer, right? And then they can just start pulling their bids. So if they absorb on the offer, then feather into the bid, hit into the bid, right? And then this 117, 120, 127, when price gets there, they can just start pulling their bids, and then the market will essentially drop. So what I'm meaning is you can be 4 or 5 ticks offside before you blink an eye when the market's this thin. JP, this is the E-mini S&P futures contract, which is essentially a futures derivative for the underlying S&P. And then you've got, so actually I should explain that. Sorry. This is ES or the S&P. This is Nasdaq or NQ, the Nasdaq futures contract. This is NQ is going here. If it breaks the point of control, we may see a little tick down in ES. This is the Russell, so small to mid caps, and this is the Dow, which is kind of in its own lane. But we have them up for basically synergy and correlation, so that just an example, if the Dow's up here and ES is down here, then you're pretty much in balance. For the market to go one way or go the other, it has to be going in tandem with each other for moves to be smooth. So I hope that makes sense, JP. But then if you're talking about market makers and how they'll do it, is their job is to try and make markets efficient, so that there's always going to be a buyer and seller at each price, and they get compensated by the exchanges with really low commissions. And let's see if they take this here. They do. they get compensated by really low commissions and better margins than what any of us can ever get. But that means that they need to basically fill positions when they don't want to. They've got certain quotas that they need to meet on a day-to-day basis. And what that means, though, is they'll be, for example, buy the underlying hedge on futures or buy futures, hedge and options, for example. We've got no idea what their overall exposure is. That's completely in-house. No one does. Not even the largest firms will know that. But I'm just telling you specifically for the futures market, there's probably two or three big firms that are working the bid and offer at the same time. Because it's not a coincidence that like 4 or 5 ticks away from price, it's always 100 bids. It's literally the same. The offer's a little bit more stacked than the bid at the minute. But that's just the games that they play. And typically when a market is in a range like this, there's no point. There is no edge here right now. Unless you've got a dude that's a market maker friend that calls you and says, right, we're working a range, a 10 tick range, for example. Because you've got no idea, are they going to drill it past the POC? Are they going to take it to 57 and a quarter? Whereabouts are they going to work the range? Because it's always Sod's law that the time that you decide to play in the range with them is the time that they'll pull their bids and then you're stopped out. Do you know what I mean? Because you really don't know. Hello Neil, how's it going today, buddy? Data is from Denali data feed. But TP, is yours combined at all? Like this is per tick. Ah, right. So where's it going? I really don't know. It could be going. They could just be spreading it across completely different asset classes. And the trouble is when the book is thinner, it doesn't take as much to move price, which means increased volatility. Wait, so you use Denali, and you're saying your ES book is thicker? Can you bring up a DOM, screenshot it, and send it to me? Because I'm curious. Because that's really important. Can't be, right? Surely. I mean, I've got mine completely unfiltered. This is just resting bid and offers. I've not filtered anything. Apart from showing, I've got the recent, I think it's like 20 prices here. Yeah, if you could, mate, that would be great. I need to see that, to be honest. How crazy would it be if there's some sort of weird setting I've got a Denali that just magically makes the book thinner? That would be grim. Can't be. Fart. Oh, it's been an okay day, mate. I mean, to be honest, traded a bit like a dick today. Was it a horrible day? Uh, Profit wise, um, just not a great day, to be honest. Just one of those days where in a trade, instantly offside. Had to hold them for too long. Held the losing trades a little bit too long. Just one of those days. Right. Okay. Okay. Thanks, Kel. I thought I was losing my marbles there. I mean, this is we should all be seeing the same here. I mean, at least we can, hopefully see it's the same shitty bid and ask with how thin it is. I don't think I've seen the bid and ask is thin, to be honest. COVID's basically ruined that. And the thing is now is the fact that when the bid is this thin, or the bid and ask is this thin, basically orders are now chopped so much, so it's harder to spot in a way because large firms are then obviously using algos, but they're now breaking down trades. So instead of going in with like 1 to 200 contracts, they're now breaking it up into like 10, 20 lots and just banging them continuously. Or they'll even machine gun them in at like 1 or 2. I was trading treasuries. Treasuries was a wild day today. I was trading 10-year and 30-year. Good question, Sebastian. So, just generally speaking, when the market is, like, we'll use today as an example, right? When the market's in this bell curve like this, it's a no-go zone for me. Like, I don't even, it's just not even worth it. Look, as I've described about the bid and offer, just working a range, so on and so forth. This is not our, this is not my edge. My edge is when we hit a previous day's high or previous day's low, for example, or like overnight low down here. I'm then looking to see, has a stop run happened? So has the market blip through price, right? Which would have happened up here. And then I'm looking to see, is there a delta flip? Okay, is sellers starting to come in? And even better, is the bid been pulled? Now, very quickly, what I would also be looking to then see is, are the other markets also hit the highs and tick back? Are they in unison with each other? And typically NQ will snap back first, which gives you an indication as well. So that's typically the behavior that I look for when it comes to a key level. Now, the thing is, when you take a trade like this and it goes down there, this doesn't happen very often. It depends on the day type. I would even probably say when it's days like this and it's in complete balance, the fades of the extremes are even better. When it's days like this, see this day here, do not be doing that. When it's one time framing, do not do that. It's only in days where you've already got context, because the fact that we're in extreme balance, what's the likelihood that, say maybe 3, 4 o'clock, well, it's not 4 o'clock, maybe 2:30, 3 p.m. on a Tuesday, right, at US time, before a holiday, what's the chances of it ripping the highs on not really any positive data? Do you know what I mean? Plus as well, the day type is already in extreme balance, so that's the type of context that you look at when you're in that trade. And then of course all the other behavior factors that come in that you need to be thinking of. But that's typically how I would look at it, Sebastian. Nice. If you've got any questions, I would advise you to go to the OrderFlow playlist series and work your way through. I think there's actually a link in the description. First things first, there's a correlation video. In fact, I think I've put them in order, to be honest. So you need to, what it takes to be profitable day trading. What futures market should you trade? Depending on how you are as a person, your risk tolerance, how thin or thick the book is, so on. And also there's tick to commission ratio broken down in there. You can then go into correlations, and then there's live trade examples on ES, and some food for thought on treasuries as well. So if you work your way through, okay, we're selling off now. If you work your way through that, and any questions you've got, if you want to leave them on the comments of the video, and let me know if you get any questions. Yeah, sure do. There's a Discord group. Good question, Martin. I'll answer that in a second, buddy. So there's a Discord in the if you go to the About Us or the channel bio, there's a link to the Discord there. If you want to join, it's free to join. And Martin, yeah, so similar to bonds are obviously not as aggressive as indices. They tend to trend more. I would say the last like probably week or so, maybe a little bit more, is not the normal behavior of treasuries. Treasuries has been trending a bit recently, or at least it's been giving you quite volatile days. You know, and a volatile day on the 10-year is like 35, 40 ticks. The average is like somewhere like 20 to 27 ticks, to be honest. Roughly about 27 ticks. So different sort of idea. Treasuries, you need to pay more attention to the volume profile, because it's just not as a volatile asset. So you need to think of like, are they going to potentially take stops to the high or stops to the low? Are we in a tight range? And if it's in a really tight range for the day, it normally just mean reverts back into the POC. It's just a slightly different market, and you can hit treasuries a lot more for size. It's much more slow moving. It's just it's a completely different beast to equities. Or indices, sorry. And again, I'd advise everyone to try different markets and see what fits. If it was me, and I was, running a prop desk, I said this yesterday, but I was thinking about it more last night. And I would have everyone starting off on treasuries just to sort of gain their footing, because you're not going to lose a lot. That's the thing. And when you first start off, you need to make sure that you're not losing a lot. And it's actually your goal should just be to break even, to be honest. And then once you get a decent sample size of trades, you can then tweak it, analyze it, see where you're going wrong. You need to have a number of days and a number of trades under your belt, so you've got some data to analyze, because we live and die by data, but you need to know the data on yourself and your own behavior. It's very important. Yeah, exactly. The market with the bond auction that came out, I think it basically went to last week's value area high, or volume value area high, and then I think it then just reversed back. So I wouldn't be surprised if we just revert our way back, consolidate where we are, or revert our way back to the day's point of control, to be honest with you. But that's pretty much the session done. Maybe see a little bit of volume coming in the next hour or so, but that's pretty much it. It'll be in probably max 10 tick range from where it is. You need to be watching bonds at the open, so probably an hour before the open, so that's like 7:30 to 8:30 US time, first couple of hours. Then it will tend to, if there's not any new data that comes out, then the market will slow down at lunchtime, and then you'll maybe get some trades in the afternoon, US time, and that's it. But like now, if bonds have not really did anything, it's not going to do anything now. Put it that way. Sebastian, do you like them? So you like the Bund? Yeah, to be honest, I've been tempted to trade the Bund, or basically Europe's equivalent of treasuries. Um, but I find trading really draining. Like, see when you're staring at the DOM and watching four DOMs and really paying attention for a couple hours, it's very taxing. So I don't want to really trade. Um, the guy just spoke in my ear. Let me mute him. Um, Sorry, where was it? Yeah, I don't want to trade the European bond open, then be exhausted for US open. I like to just pick one, to be honest with you. And I've been doing this for a long time, and like, you really need to value your mental capital out of a trading day. If you really exhaust yourself with a number of trades, um, if you exhaust yourself with a number of trades, when actually it comes to the good setup, you're going to manage it like a dick. That's just the truth. I still do that, to be honest. In fact, I'm going to turn this on, and then I'm going to basically just mute it. But yeah, that's the script. If you prefer to trade that time, by all means check out the Boon Bobble in the chats, which is basically your equivalent of the 2 5s and 10s and 30s. You can mix them in, work the same way. Let me know if you guys have got any other questions. We are currently right bang in the middle here. It's going to take an earthquake or something to get us out of this. I hope you guys realise, like, now you've been watching the streams for a while, that when you just look at this, when you've been doing this for a long enough time, I don't understand how anyone looks at this and says this is going to go this way or that way. Do you know what I mean? Like, even in traditional charting, I mean, you've kind of made a higher high here, pulled back, then made a higher high, pulled back. I suppose the general retail chartist is just gonna be like, right, I'll buy here and then target up here, I suppose. But then with that, if they're to buy here now, their stop's going to be below here. So, you know, firms and people with tons of money are going to know that, because anyone that buys, they're going to have a stop either below here or below here. And if they're really stubborn, they'll be below here because they don't want to lose, and then the market just takes it down there, and then it'll probably revert back in. So we've yet to sweep down here and then back into value, but that's pretty much all I think is going to happen, to be honest. Mm-mm. It's not very great when the streams like this, so it's probably good to just ask any questions you guys have, because the price action is garbage. So days like today, with how I don't know if it was stressful or not, but Exactly, exactly, Trader Boy. I mean, seriously, if you didn't even incorporate order flow in, if you pretty much sold up here, if you just, I mean, very, very simply, right? If you, let me just draw the lines. So at the previous, sorry, let me zoom in here. Right, so this is typically just a general way. So this is a swing high, and this is a swing low. Okay. Very, very simply, the market, especially in pre-market, if it goes to these levels, it normally will sweep, right? Now, I'm not just making this up. You can do this in any session you want. You notice they'll drive it. You don't know how much they're going to drive it, but people that would have bought here, here's the stop. Oh, look, literally a little dip below, you know, sweep back up. Now, let me try and do this, and then they then set the market targets in here. And before you know it, you this swing high that was set in the overnight high. We then hit it here, revert back down. It's just a constant, swing point to swing point. Take the liquidity, revert back into some form of value, right? That's pretty much it. And if before you even incorporate in order flow to help you execute your positions, which should give you an even greater edge. You're a major advantage just by knowing this. Because look, they've done it here, and it went up. They then hit it again, then it went up, and then they started doing it again up here. Then they've hit it again. This was the actual swing point from up here. Doing the same. Do you know what I'm saying here, man? I'm not crazy. Go back to any day in a chart and draw this in. In the next session, they will definitely sweep the high or low of the previous session at one point and then do some form of reversion. Because realistically, see these days, this day here, where it's just absolutely moon, this is like an edge case. This is, 10% of the time stuff this happens. This is the reality of trading. And we've got no idea what type of day type it's going to be. You really want to wait till initial balance happens so that you can get a feel for, how thick is the range, how is the book looking, what happened in the overnight, what data points we got coming out. Do you know what I mean? It's all this to sort of formulate your plan of attack for today. It's like a checklist. Because the trouble is, I'm not a big fan of just telling people, hey, here's the strategy. Do this and you'll make money. That's just not how it works at all. If it was that simple, I would have coded it 5 years ago, and I would currently, I would be in Bahamas with my little robot. The skill the skill in trading is discretion and knowledge and screen time, not mechanical stuff. Because you better believe that some of the best quants in the world will have run extreme back testing on every single little nuance you can think of, and it all boils down into volume. The market without, if you remove all of the weird chart patterns and technical analysis, the market is an auction. And it's like a ladder where price goes up and down. People want to buy, people want to sell. You know. I mean, I suppose I'm slightly biased because I've traded OrderFlow for so long, but I can't see any other way that how you can view the market. It's just so black and white when you look at it in a depth of market. And that's when you see other, trading strategies, and you're like, oh, that sounds good, and that's probably an edge. But you could refine that if you just if you put in some form of order flow or volume analytics in there. It would definitely, it can't hurt. Do you know what I'm saying? My change gets improved upon adding order flow. Okay. Nice, trader boy. Exactly, exactly. It's a really good point, trader boy. And I think the before you take a trade, right? A general thing you should think of is like, right, if I had 5,000 contracts to execute right now, what would I do? Put yourself in their shoes, because that's the dilemma, right? These guys will probably have orders to execute of a day. They will literally have a morning meeting and they'll say, right guys, we've got 50,000 contracts to execute today. Um, on long, we want to be net, we want to be, net long X. So here, trading desk, can you guys execute? And then the trading desk will probably put it into the algorithm to start machine gunning them or break it down. Right, I need to mute this, guys, because this is annoying when I'm talking. So if you were to think about where these guys are going to be executing the trades, it makes a big difference, because just because when we go to buy, right, so we want to sling in, I don't know, 4 or 5 contracts or something, there's never going to be a time in ES or NQ for that matter that you're not going to get filled. It's just not possible, right? Whereas these dudes, if they've got thousands of contracts to execute, they can't just go in and buy. They need to start working price in. They're not just going to dump it all. They're not just going to go and layer it, are they? They're not just going to go like 500, 500, 500. You're going to start feathering in, get some profit, hitting in some more, and then you can think, whereabouts can I get my most fills in this chart? So just keep that in the back of your mind. And it's all about realizing who the competition is. Do I think futures drive? No, not necessarily. To be honest with you, I mean, it's basically where the size dictates, right? Because believe it or not, if you come in right now, say you didn't know any better, but you had shit tons of money, right? Say you had money coming out your ears and you didn't realize what you're doing. You came in right now to this market, to ES, and you went long 2,000 contracts. The market would go bananas. You would literally affect the underlying, you would affect options, and you would affect, more than likely, the underlying stocks as well, because it triggers a cascade, because algorithms instantly pull, things move, they cut exposure, it happens in seconds, right? And that happens if someone comes in right now and just bangs, thousands of shares or whatever into Apple. It affects futures. Do you know what I'm saying? Everything is correlated because it's the same market making firms that are working the bid and offer on all these different markets and products. Nico, buddy boy, how's it going? Nice of you to stop by. Nice of you to stop by, my friend. How's your day been, Nico? Did you take any trades, buddy? Sadly, this is the worst price action known to man. JP, so the fact that the markets are correlated, it doesn't mean that they don't move in their own right. The market is of course has its inefficiencies, right? So, for example, the market gets up here, they can bang it in futures, okay, which then maybe not move exactly on the underlying, but that's enough to take out stops here, and then they drive it back down. Or when they're banging this up, it maybe allow them to get fills on the actual equity that they're looking to get filled. But it's typically the areas or the inflection points between previous day's highs, overnight highs, you know, areas that are important in the market is typically where large traders get involved, just because there's going to be a lot of orders situated there. But the thing is, JPs, they don't all move tick for tick like all the time. Nico, you catch a 250k Apex account today? What, you mean you passed it, buddy, or you bought one? Hello, are all 100 NQ companies in the yes? Yeah, so you've got the yes is of course the top 5, and it's a basket of completely different industries, whereas NQ is solely focused in tech, which is volatile in general, right? But they are completely correlated. That's the thing. NQ, in my opinion, tends to lead just because it's just so much thinner. I mean, look how thin the book is. It's crazy. Oh, so you hit the target. Wow, well done, buddy. That's a cracker, man. Now you just need to try and jump through the hoops to get paid by Apex. Pardon me. But yeah, but I would say JP is trying to think so deep about it that just know that the market rotates to highs and lows and seeks a fair value price, but they have to go to these areas of liquidity to get their orders filled. As just in a nutshell. And you need to remember that they're working the bid and offer at the same time. So typically as well, when the price gets above a high, you're going to have the people that were working the bids. They then start working the offer, to get out of their position as well. And then all of the stop orders that congregate there, they allow the selling to get filled and more selling to initiate there, which is then what causes the correction and sweep back in. And you can identify stop orders being triggered on the DOM just by a blip in price. So Kel, I'll use treasuries as an example. So treasuries, the order flow is slow motion, so it's much easier. So I'll explain it that way, and then we'll put it into context for the ES, and forget NQ, because NQ is just a correlation thing. It's the order flows, it's fucking bananas. So on treasuries here, right? So you see like 1,000 bids, 2,000 offered, right? You'll see the market lift in, take the 2,000, and then they'll go up to the next price and then reload like this. So they're selling in here, and then they then reload the price. So that's the type of behavior that you want to be seeing, right? You want to see them take that that's there and then reload like so. We'll clear this. It's hard to explain it because the book's really thin, and that's why I'm advocating for treasuries. But in essence, what you want to be seeing is you want to see a continual hitting into one price, that not being absorbed, and then when it ticks down, you want to see the next price then reload, for example. Does that make sense? So if you were selling right now, okay, and then so say you were selling up here and the market gets down here right now, and there's 185 contracts sold into 54 and a quarter, right? And they're not cracking. You can see there's a bit of two-way. Ignore that we're at POC, but then you'd want to see that going. So right now you want to see them reloading the offer, and you want to see them continually hitting, and you want to see the bid being pulled as well. Now the trouble is with ES, and this is why it's such a janky market these days, is it's never as simple as that. They never just drill into the bid, reload, drill in, reload. They have this constant, hit into the bids, then market ticks up. They need to see absorption, then they hit in. Do you know, it's never super smooth anymore. And that's just because the book's so thin. Does that make sense, Kel? So like, if you're looking for the market to go down, you want to see a combination of aggressive selling taking place, the offer remaining strong into next prices, okay? And ideally as well, you want to see the bid been pulled if you were selling. So you want to see sellers hit into it, and then, when it gets to like 73s, only 20 trade, 50 pull, and it gets down here, they just continue to do it. So you need to be noting and really paying attention to these prices, right? At 53s, there's 100 bid, okay? There's now 103. So if price does get there, is that actually going to trade? So when the price gets there and they hit into it, maybe only 50 will trade, and then, they've like pulled like 80 contracts. So it just means it's a weak bid. And then you then factor in delta as well. So how is delta been for the day versus where is price at? So we can pretty much see since open, we're relatively flat for the day today. I mean, slightly bid, and delta is like plus 3.5k, right? So nothing to shout home about, just a relatively balanced day. But it takes a lot of screen time, man, to get efficient at that. And that's why I always say to people to start in treasuries, because I can't advocate enough how simple it is to watch versus ES. Because it doesn't break your flow more. You'll see aggregation at prices, so there's 150 hit into the bid, okay? Now they're continually reloading, so this is a perfect example. So they're reloading here on the bid, 280. Okay, you would want to see them then take, okay, so they've took the next price, then they've ticked down. So you want to see them take out this. There's a bit of 2B action here, but you want to see them take out 55 evens and then reload, but they're not. This is what I'm meaning. They're just working the bid and offer at the same side. They're just working this range. There is no edge here because these guys can just throw up 300 lots, stop the market, and then do as they please. Nicely done, trader boy. Nicely done. Yeah, icebergs. I mean, to be honest with you, that was pretty much an iceberg there as well. You're not a very big one, but as I say, the ES is relatively thin, so it's that is an iceberg. If the price gets to it and there's only 40 refreshed and they continually hitting into it, and next thing you know, 367's there, you know, like here, for example. They're continually hitting in there and there's just more refreshing going on. But this is to be expected at point of control. You know, point of control is the area where the most value has been done, so traders they can get their size off, and that they need to get the quota done for the day, and they can do that because there's not much movement. That's what they want, because they've got two main ways: they're executing for their own book, and they're executing because they're filling clients in OTC. You know, because you've got pension funds and other big, I won't call them traders, but we'll just use the word traders. It can be anything from individual people to big funds to big commercial organizations that want to be long or hedge their exposure, and they would phone these large market making firms and say, right, I want to be long 5 million. The market making firm will use Goldman, for example, will take that price and quote them below the best bid or above the best ask, for example, and basically take money and charge a commission on the trade. But they then need to take that order, and they then need to decide, are they going to hold that exposure or are they going to hedge it off, for example. And that's how the market can move of a day with absolutely no news, no nothing. It's just creates volatility. So that's maybe why you're thinking, why are all these orders going off at point of control? Like, why are these guys trading here? That's why. Because they need to get orders off. Because they're on the same boat where if they've just taken a position, OTC, you know, for say they're now net 10,000 contracts, for example, right? They now need to start hedging off that exposure because they don't want to be holding the bag if the market goes up or down. So they need to start basically holding a market. Does that make sense to you guys? It's just more of an insight into how the market actually moves and what goes behind this actual price action. You don't really need to know why. I just think people that are critical thinkers are more than likely going to ask the question, why? Why is there so much volume at POC? What's the reason? To be honest with you, JP, when rollover happens, you just don't trade, to be honest. Treasuries rolled over a while ago, so when it's rollover like this, it's best to probably skip the week until the market settles down, to be honest. But if you can see what I mean when you're really staring at the DOM, when you really start watching here, so now they start flashing 50s. So now they add in another variable that you need to pay attention to. Right? So typically buyers here, if they were aggressive, should be taking these orders. They should be lifting into them. Right? Because there's some size there. Now note if they're going to start pulling these. Because here's another tool. If you had thousands of contracts to execute, right, and you wanted, you know, and you wanted to be selling, for example, right, and you needed to get a lot of orders off, you start planting out some size. Buyers should be taking that. If they were really aggressive and hungry to get contracts and lift the offer, they would be taking that. You know, because someone can probably get away right now with slinging a couple hundred contracts and take this order out. But you can see they're now absorbing here on the offer. So they could be spoofs, of course. Now let's see, but they're staying strong at the minute. So market send just ticked off it. But yeah, I've covered all this in previous streams, but I just hope it makes sense to everyone. It's trying to put it into context and just But you realise why they're doing this. They could be testing the waters, they could be setting the range. Again, it's kind of meaningless because you're not trading this in this range anyway, but you know, it's a good sign to be checking that the buyers should be really taking that. You know, it should be lifting, taking the next price, especially when the size there, because they should be getting their orders filled. Seeing someone there again absorbing an offer, that's twice. Sadly, I think we're probably going to fill 57s, then we'll just tick down back to POC. Some size actually just come in there. But let me know if you guys have got any other questions about that. But yeah, pretty slow day markets, to be honest. Now we'll see if we've got an hour till the volume comes in. I can't see anything too exciting happening, but I think we're definitely going to break out of this range. NQ's going, needs to break below POC. Until it does, I don't really see too much happening. Here we go. Now you want to see them continually hit into the bids here, and you want to see these 100 lots here pulled if this is to go down. At least I can't really see it happening, but that was what you would want to be seeing. And instead they tick down, then they're upticking 3-4 ticks, so you still want to see them pull on the bid here. NQ needs to go, which is not going. NQ needs to hit this level down here in order for for ES to go down. Notice the uptick, so NQ's ticking back up to point of control. If it does, then ES is most likely going to do the same, which it is. Let's see if they're going to take this 50 lot here at 84 3/4. So you know what's weird? How come when you enter a trade and you rush and it immediately reverse? So this is the thing. You know, this is what I was saying is ES at the moment it revisits the same prices a lot. So it will hit into the bid. It will then get there. The market will basically stop because there's some size, and then it'll just tick off like 3-4 ticks, and then you ultimately need to have the offer reload and hold and then hit it back down. So like right now this needs to go in order for this to go down. So the market stopped here at 51s, and then we've just upticked 4 ticks. Now the offer is reloading. They need to hold this price and then continually hit off it. So this is what I'm saying. When the bid and offer is thin, you're offside 4 or 5 ticks instantly. It's hard in the markets like this. There's just no follow through in real direction. So still, you need to see the offer hold here and then continually hit into the bid. Otherwise, we're just back into no man's land. Because if NQ goes above POC, then we're back up here now. And yes, which we are. So this now no longer is the short on anymore. Do you know what I mean? This is just a classic example of these firms being able to just work the bid and offer at the same time. They've just stopped the market dead there. But then you're thinking to yourself, well, only 129 traded. That's because then the market to get up to here, 88 traded, 26, 17. Nothing stopped here on the offer to basically get it through. So that for that to happen, there has to be offers pulled. So what you'll probably find is it's the same firm that is sold this price down, and then this is them getting out, and then they pull their offers, and then before you know it, you're 5 ticks away. There's no way of you knowing that, but it's the only way the price action makes any sense. So now they're trying again. So you want to see them continually hit in. That someone is reloading. See, they're still reloading here on the bid. So now what they're doing as well at 51s, they're basically placing this 50 lot here and saying, okay, are you going to take me? Because if they don't, let's see if it takes it. Sellers here should be aggressively taking this. Let's see if it ticks off it and then offers are pulled. Nice, so they take it. And then you're back up ticking again. Jesus, man, this price action is shocking. But NQ is going, or at least trying anyway. It needs to continue down in order for us to keep on going right now. And they are trying. I mean, sellers are coming in at the moment. I mean, this is the last thing you want to be seeing when you're selling. 232 contracts absorbed in one price. It's the last thing you want to be seeing. And then they need to now break 51s. 51s has been the key level. They're letting it go back a few ticks below, but they need to break 51s with some conviction as well. And the trouble is, once you break it here, you've then got 48s down here. But we're not that far away from low day. But just watch how they're working 51s. So notice they down tick a few and then up tick. So you want to see them hit into this with some conviction, right? But you need all the markets to tick down at the same time. NQ needs to break, 59.5s. I mean, they're certainly trying here. But the trouble is, this is like, it looks like it's going to go down, you sell, before you know it, they pull the offer, and then you're right back in at POC. Brutal price action. Okay, surely, surely this time. There's no surely about it. Oh gosh, it's pain. But yeah, not the most entertaining session, guys. So, but how does everyone in here? Do you guys all trade order flow, or at least are you learning the ropes with order flow? Yeah, I hate this type of action as well, Neil. Honestly, I mean, this is just if you tried and preempted the market in this in this type of action, you would have a terrible day. The only way that it makes sense is if you have one account bid and one account offered, and you basically just buy at the bottom of the range, sell at the top of the range, and work in between the range and try and take two and three ticks. But you need to be doing in the same fashion as what these firms are doing, where they're working the bid and offer at the same time. So your range is capped. So if it goes up, you've got a long position and a sell position in at certain points. So you're relatively covered, and then you're just buying and selling in between the range. That's the only logical. If you put a gun to my head and told me how could you make money in this price action, that would be how I would do it. So learning order flow. So learning, no directional movement, setups come but don't fall through. Exactly, Neil. Good. So you guys are all trading order flow, or at least at the stage of learning. Fantastic. So good question, Neil. I would say that you basically got the majority of the action is going to be from machines, or algorithms that are running there. However, the algorithms are still controlled by people, right? And they don't just magically buy and sell. They have to be given prices and order types and everything along those lines. It's still made by people at the end of the day, you know, and they'll be constantly changing what types of algorithms they're running. You know, there'll be the classic machine gun one lot algorithm. There'll be one there is to try and break up iceberg orders, for example. But but the reality is the speed that ES moves now, right? Especially when it's in this type of movement. These guys are hammering into a price, getting out, then pulling offers, and they're doing it in like split seconds. I mean, can you imagine Citadel trades 500 billion volume a day? You know, there is no way humans can click that many buttons. Do you know what I mean? Especially across multiple markets, it's not possible. So like right now, we're kind of at the top of this mini range between POC high and POC low that we've kind of got here, right? And again, they're then setting up here at 56s and 55s, and then you've got 48s. So this is pretty much the range is going to be set here, where these bids and offers are in. And notice to get to the high here, they then start working the offer, then bids are pulled, and then you're back at POC. So it's just we're literally just in like a 10, probably what 10 12 tick range at the minute. Exactly. I actually play quite a bit of chess, SP, and Stockfish does moves that, there's even varying, there's even, you know, better quality Stockfish, for example. You know what I mean? And and a human's got no chance of beating a computer. That's just how it is. And the thing is, they have like dudes that have got PhDs in maths and put them in a room with dudes that are get PhDs in computer science. Some of the smartest dudes that are basically brought out of the best universities and colleges in the world in the name of capitalism. You know, where they're basically continuously analyzing data. That's all they are. They're just data analyzing machines, looking for continuous inefficiencies across all markets and hedging their exposure. Yeah, exactly. And that's the thing is that they're so for example, for a round turn for us, say maybe you're doing a decent size, you can maybe get it to like, $2.50 or something for ES, right? And that should be doing a decent size. These guys are paying like 2 3 cents, 5 cents a round turn, you know. So their tick to commission ratio is so good. They can take like 10, 20 scratches or something, even more than that. Ridiculous numbers. For it's not just one algorithm they're running. There'll be multiple different ones they're running, and they need to watch out for each other. That's the thing. They certainly don't need to watch out for retail. Retail is just free money in the pot for them, really. I mean, just as an example, right? Can you imagine being able to analyze, like, say, the top 100 stocks in the S&P, where other indices are at, okay, and thousands of days of data when X happens, then Y is a probability of happening, for example. And then also they have, the knowledge of what orders are behind them, and they're probably buying market order data as well. So some brokers will be selling the market order data to these firms, so they know what market orders are coming in, just as they're sitting on the bidder offer. I mean, these guys are literally spending millions of pounds to be like a square foot closer to an exchange. It's crazy. So there's like zero latency. Well, we can't get zero latency, but do you know what I mean? It's now just speed, and that's where you need to identify with the markets in this type of range and price action. Count yourself lucky if you make money. Put it that way. Yeah, yeah, right, DV. They get. It doesn't cost them as much money to basically open a position, so the margins are better, the commissions are better, and most likely they will either get discounts and commissions, probably plus rebates as well. So the exchanges will actually pay them money, and they do that so that the market is kept efficient. So that there's not, because it's really bad press for the exchanges if you see days where the market goes absolutely haywire and it's put on the news that things go crazy. You know what I mean? It's bad publicity for the exchanges. So they need these companies to basically help a status quo. I mean, these companies literally run the show. I mean, seriously. If they want to stop the S&P or futures or whatever it is, if they want to stop that market from moving up on a tick, they can do it. Okay, let's see if we go up to the 55 and a halves here where the 60s are quoted. Let's see if we take this and then revert back to POC in classic fashion. Let's see how we react off this. They're going to fully take the full 60 and they don't. There we go. Instantly hit into the offer back to POC. Classic. Just at it again. I mean, you might as well now just draw the micro ranges in, right? So this is a micro range high. This is a micro range low. You know, with chances of us getting up here again, but this is pretty much the market now broken down into chunks. So they have all of these levels to basically hit here, revert back, hit here, revert back, same again down here, and everything is going to revert back to our pretty much our point of control. So round about here in this range. Looks to be anything out of this box right now has just been instantly faded back into the box. And can you guys hear me okay? I just had the streaming software reconnecting. Hopefully you can hear me okay. If you can let me know you can, please. Tell you what, let's go to the 1 minute chart, seeing as it's it doesn't look so bad when it's a 1 minute chart, does it? Nice, thanks Neil. So yeah, what kind of range are we talking here? Is this like a, I mean we're pretty much talking like a 10 full range 22 ticks. That's pretty much all that's going to happen. We need to see what they're going to do. There is volume coming in the next 30 minutes, or even 30, the next 25 minutes, and then we should hopefully see a little splurge out of this area, see how far they can drive it, but then ultimately they'll probably revert back into this area. So we notice some size come in there. It's literally popped above. Okay, so let's draw a line. Where are we? 56.75. So right here. Oh. So let's see if they hit it with some size and look right to the tick. It's like you could have a crystal ball. If that's not an algorithm that's doing that, then I don't know what it is. So, and if we do hit above here with some oomph, with some size, we should see a little mini stop run here. And now they're stopping above the range. They're then, wow. They're like, you shall not pass. You shall not break out of my micro range. No, 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 no. Back in you go. And then they pull it as well. Oh fuck! Honestly, it's like a circus. Honestly, I mean, look at that. Unbelievable. Sneaky, sneaky, sneaky. Unbelievable, honestly. Classic. That is, I think if you were to show like a market making clip, that was it. High of the micro range, they hit it, and then they flashed the 50 to drive some price down, then they pull the order. Classic. Okay, are they going to defend it this time? So they're absorbing here. Right on the tick. They're absorbing. This looks like it could be going here, but we'll see if we're done. If we do break through here, we should see a little mini oomph. Stop run. Yeah, exactly. Right, this is the third attempt. If we do crack here, we should see a little blip, but they're just, when they're getting to price here, they're just not blasting it, are they? And then they're aggressively hitting into the bid, and then before you know it, we're back at POC. And then if they gather at O, they're flashing there. I'm going to clear here. So they need to clear above 56 and three quarters, because if they don't do it soon enough, and they get below POC, you've got all the people that are going to be buying here, they need to start covering down here. And then before you know it, we're back at the other micro range, and it's the same thing. Wow. Wow. Look at that. That's one way to get back in the range, isn't it? Jeez, oh. They just absolutely dumped that there. Can someone bring up a time in sales and tell me if that was one order type or it was just machine gun? Someone check that. That was madness. But again, notice right at the high of the micro range, they literally hit it up by a tick, but then they've just done all their shenanigans right there. Classic. Here we go. Now we're going to the other side of the range now. Okay. This would be a fantastic talking point. If we can get down to 50s, let's draw here. 5, 5, 5, 5, 5. All the fives. 55. So that could be a bingo caller, I'm telling you. Uh, 50s. Yeah, it's 50 on the dot, isn't it? Yeah. Nice, Neil. Okay, so this is the range that we have. This is the playing field of the market maker life, which is right in the POC as well. Who would have thought? So I hope this has been somewhat, even though the market has been pretty shit, but hopefully it makes sense as to what we're discussing right now. Okay, here we are back again. This is the fourth time after the dumping. Let's see if we can crack out of here. They're trying, they're saying, I'm willing to support the bid. Now if we do crack above here, they're just literally not allowing it to go, are they? If we do crack above here, which NQ needs to go, the Dow is already going. And if we do hit some size up here, we should maybe see some stop runs, or a mini pop. But we're just not doing it, are we? It's just they're just not allowing it to break out of this range. Wish I had the foresight though to know that. The more you hear it, the more it sinks in. No problem, trader boy. I'm glad you think so, but it's just how to view the market, in my opinion. It's you know, certainly not higher lows or high highs or whatever way people view it. If only you can draw triangles that go up and down in a pattern. If only it was that simple. Okay, NQ's just gone. See if we can hold up here. This is going to be like what, the fifth time they're hitting this? I mean, it's only so long they can keep this here, you know. And it's the less pullbacks they're having each time as well. Thank you. Can have a little pop. We should see enough here to cascade potentially. Where is the oomph? There's none. They're buying it though. There's a lot of buying here. 57.5. I think they've just exited the long positions there, if I'm honest with you. 500-600 absorbed in the offer. We have, oh god, this is M period already. Wow, this is grim. So it looks like they'd exited the long positions and then potentially we'll just now bang it back in the range again. This is destined for back in the range here, isn't it? We need to see the flow that comes in the next 15 minutes. See if anything exciting happens. It's I think a lot of you are already supporters to the channel, which thank you very much. But I'm going to place this here for anyone that wants to further support the channel. Let's keep you motivated. So thank you very much to everyone that's been supporting and assisting, for everyone that's been showing up every day and hanging out. You know, it's much appreciated. We've been getting a lot of new faces in the last couple of weeks, so it's great. We look like we're destined. NQ's already below POC. Kind of out of whack a little bit here. The Dow's in a world of his own. So like right now we've got NQ going, the Dow's up here, Russell's at point of control, and you know, this is out of whack right now. It definitely doesn't scream that we're going to go and melt the highs. NQ needs to catch up and get up to like ones or something, 1.25 here. Yeah, exactly. Exactly. We've done absolutely nothing since then. I mean, look at the difference. We just had a continual selling. No pullback. That's what you want to see. And it's died off. We've just been ranging since. But this looks like it's destined to go back in the range at the minute. But we still do have our, you know, in 10 minutes we do have the volume. They can definitely bang it here. So the next level that we have, I mean, it is all the way up here, mind you. Which is high day. Well, actually, it's not that far. That's a 1 minute chart, so it's really not that far. They could quite easily go up and fill this order up here, bang it through, reverse back. So we could easily do that. I mean, look at this. There's just not really any delta as well. Just the market's just not. We're just plus 516 delta today. It's just extremely. Even the delta's balanced. Yeah, they're definitely absorbing here, but sadly, you know, as soon as once they get to enough, and then they just pull this bid, we could be off. They should be aggressively taking this here. I mean, the Dow is going, so we do take it. We just need to watch for the bid's been pulled, is all. And the order flow starts to come in, or the volume starts to come in 9 minutes. Yeah, so just watch the bid for being pulled. Okay, this needs to hold. 56.5 needs to stay strong and need to continue lifting. Yeah. But now you're basically going to have, if they crack this here with some size and the bid doesn't stay strong, all the buyers from up here are going to need to start covering, and then we're back at POC again. NQ is also going down. But the Dow is giving everything a bit of hope considering it's ripping. Not as correlated as others, but it's all going to happen in 7 minutes. Where we should see one side is going to have to puke. And we now need to check the high that's just been set, which is 58, 58 and a half here. And this is the area where, the classic sort of, I don't know, break and retest is 56 and 3/4, so they need to hold this area on the bids. NQ, ES could really help with NQ going bid at the moment. I think in the next 7 minutes there's going to be a puke. So still holding 56 and 3/4, key level. Because if we do crack this, then we're back down at POC. Maybe give it a couple of ticks, but NQ's also going. It's not looking great. Needs to hold NQ. NQ's going. They're really trying to hold it on ES at the minute. Yeah. It's basically an NQ move that's not helped, to be honest. It's pulling everything down. Five minutes. Could be the one last push down, you never know, before they bang it up. Yeah, if we get back at POC, then back to square one again. NQ is going. Let's see if we can take out 54 1/4 here. Okay, we have action in 3 minutes, ladies and gents. Let's let's see how it goes. Are we just going to stay in this range, or are we going to at least move? I can't really see it now, to be honest. What does everyone think? Do you think we're going to range here, or do you think we're going to puke one way or the other? Yes, that's market profile with the time on it. Okay. Going up to 62s. Oh, you think so? I mean, these 100 lots printing up there are quite sus, to be honest. So we've got 10 seconds. Now, if we do go bids here, these 100 lots are going to be taken out, and Sicko's made a good call. But we really need to do quite a bit to get out of this range, to be honest. I mean, I think in the next 10 minutes we'll see if they're going to take it out. This is the moment of truth. It just seems a bit sus though that they're, because NQ is ripping. Yes, need to try and catch up. The Russell is not moving. So 58.5. If we get up there and we crack, then we maybe see we can fill out those hundreds. There's one there. Okay. Maybe they think their 100 lot at 15.25 was a bit ambitious. But if we can crack 58.5, then we're on to fill out the 15.25. God, this is like watching paint dry. Shocking action. Okay, so we're gonna need the algo time to try and take out these 100 lots. Yeah, exactly. Which basically means they're just absorbing at the moment. We're not really moving. But I think they're going to go and fill these orders, to be honest. There's just too much liquidity up here not to fill it. And I think they want filled. So I'd be surprised if we don't fill out 59.5s. And if we do go up and fill those orders, then we're too far away and there's not enough volume left. Well, no, that's not true. In 7 minutes, the volume could. Oh, they just pulled that. Yeah, exactly. That's a really good point. Here we go. Let's see if they fill this out, sweep the high, and then reverse back in the next 6 minutes. They're definitely going to fill out 61 3/4 here. It would be criminal to not fill out all that size, to be honest. Yeah. Sickle was right. Okay, what's the thoughts here on wow. NQ is just, they have just absolutely hit that. Fill up though. Oh, wow, that's crazy. It's crazy the amount of shenanigans that's happening here. So you still need to fill these out, but to be honest, there's a lot of movement there. Well, if you did Trader Boy, that's the quickest scalp in history. Well done. Well, this is it. I'm thinking though we could fill out these. Top line is 63s. My computer is struggling here with this streaming and it's tired, or it's the data is lagging, which is not great. Yeah, exactly. Well, here we go. So key level here, they're definitely going to clear 71 3/4. We're going to clear 63, then take all the stops, and then reverse back into the range. This would be classic if we can do it. We're going to clear this as we've got. Well, it's not. There's 4 more minutes. Well, 3. We're doing it already. We didn't even fill that, to be honest. That's a shame. But yeah, when you start banging it all the way up here, just with this data, my immediate thought is to fade this. I'm pretty sure everyone, I mean anyone that trades OrderFlow should be fading that, in my opinion. Or it should be an initial thought. I mean, look at the amount of orders that are printed up here though. Okay, 2 minutes. I definitely think those orders are the exits, to be honest, for the people that are buying. So I think they need to get filled somewhat so that they can then start working the offer, but we'll see. So we've got a little bit of action in the last 15 minutes, which is good. Well, we want to see this taken out here. We don't want to dump. We want to see, for the sake of it, to take out 71 3/4. There we go. Jeez, oh. Okay, let's clear, but that looks like us. Let's see, are we gonna... Here we go. What's gonna happen? We're pretty much back in the range, but that's been a fate of the gods if you've taken that. Right, I need to fill 63s and then go down. Let's see how they're gonna do it. So let's see now if we reverse back to POC. Yep. Yeah, it was a lot, mate, for sure. Look at the amount of delta, it's crazy. But then, to be honest, all that buying and it's just been absorbed, you know. They start aggressively hitting into the bid here. We're back at POC in a flash. So let's see, we're gonna cave it now. I think that's pretty much us. I don't think we're cracking the highs anymore. Interesting end. Okay, dudes and dudettes. Hope everyone's had a good session. Does anyone get any questions before we look to wind everything down? We're just going to gradually work our way back now. No problem. Thanks everyone. Thanks all for showing up again. It's much appreciated. I'll be chilling in the Discord for a while, and if anyone's got any questions, feel free to shoot me a line. Yeah, but relatively crazy end to the session. But we'll be on tomorrow potentially. I mean, I don't know if there's a massive point considering there's no volume, but we'll decide. We'll have a look at the market and check it out. But for all the US peeps, hope you guys have a good holiday and you're going to spend some nice time with friends and family if it's a public holiday where you're at. But until we meet again, which I think will either be tomorrow or Thursday, if you get any questions, just leave a comment on any of the videos or jump into the Discord. But until then, you guys have a nice evening and we'll speak soon. Peace, everyone.